All right. It is 11 o'clock. Let's get started. So, Joe, welcome back to the capital raising underwriting show. It was a pleasure to have you here at our last show, and we had to stop, but I said I wanted you back so that we could continue. All right, so that we could continue. Now, before I move on, let me just tell you all a little bit about Joe. Joe Rinderknecht is the founder of Upgrade Partners Capital and has owned and invested in approximately 600 apartments, excuse me, everyone, 600 apartment units across Utah, Montana, Idaho, Texas, and Ohio. Over the past decade, Joe has Joe has developed expertise in commercial property management, asset management, and of course, underwriting, working on hundreds of units for sponsors nationwide, as well as his own portfolio. Additionally, Phil has excelled in raising capital for various real estate deals, including his most recent acquisition of a 54-unit property in Missoula, Montana in September 2024. Joe is also owner of Tiny's Tribe, 506C nonprofit organization dedicated to supporting families impacted by life-changing accidents. Um, Joe, can you tell us a little more about that 506C?
Yeah, yeah. So, little backstory on the or 506c, my nonprofit, right?
Yes, yes.
So it's actually I think I may have wrote that wrong. Nonprofit is a 501c3. So that's probably my bad. I put it wrong on the bio. Um, but anyways, a little backstory on that. Back in 2013, I was in a really, really bad car accident where I was in the vehicle. My little brother and my grandma were also in the vehicle, and they both passed away from this car accident. It was, you know,
Mm,
very, very bad. You know,
yeah, sorry to hear that.
um, just as an example of the magnitude, we were heading southbound, driving on the right side of the road. And my little brother was driving and he overcorrected a couple times. I think he swerved to miss a deer or something. We were on the back on some back roads. And after we got done rolling, we were facing north,
Mm,
completely opposite direction on the other side of the road in a field,
boy.
right? And so pretty crazy car accident. My brother was ejected and passed away, and my grandma died a week later from her injuries. I'm pretty lucky and grateful to be here. I was in the ICU for 10 days from my injuries as well. And I think the reason that I'm here today is because of one, I my little brother Clancy. So Tiny's Tribe is named after him. Tiny was my brother Clancy's nickname, and tribe is community. And I would not be here if it wouldn't have been for the lessons I learned from my brother Clancy. He was one of those people that no matter what goal he had, he went after it unapologetically. right? And
Right.
I was not living my life like that. I was living my life for everybody else. I was a
Right.
yes man and was living my life to satisfy everybody else. And then the community came and they paid for like my brother's hospital bills and grandma's life flight, or my hospital bills, my brother's funeral, and life flight. And I probably lost sleep while I was recuperating just because of the amount of people that came to make sure that my family and I were in good, mental condition. And, they came and brought us food. And,
Mhm.
I'm extremely blessed for the community I grew up in because it's what brought me back. If any of you have been in, and I hope that none of you have been in any kind of accident like that, like you essentially have two choices. You can go down a deep, dark path and hate God and hate everybody in the world for what happened to you, or you can take what happened and make it for you, and take the lessons from it and move forward. And I realized because my brother was 22 months younger than me.
Right.
I was 21 at the time. He was 20. I was it was, right in the middle of our birthdays. And so I realized I needed to, work and live for him, um,
Right.
because he was no longer on this earth, and and so the nonprofit Tiny's Tribe is essentially that we find families in our local communities that have suffered some kind of incident or accident that resulted in death or severe injury. It's usually, one of the parents, um, you know,
Right.
somebody that's bringing money in or whatever. But we like to help these families in four main areas. And, first one is money, of course, right? Some type of financial stability to pay for bills, for, food, whatever those financial needs are. We'll even negotiate with a funeral home and have them cut the cost. And, since we're a registered 501(c)(3), we can give them, a tax form for their taxes. Second thing is we do food. So as you can see, I've got a cowboy hat on. I've got quite a few ranching connections, and a handful of the people that we've helped, we've given like a half a beef. And for most people, a half a beef can last an entire year, right?
Mm.
So, and then the third one is we'll go and do repairs to their homes. If they need a wheelchair ramp or something changed in their homes based on what's happened. Really,
Right.
we're focusing on the necessities of life, right?
Right.
And then the fourth one, which is in my mind the most important of all, is the mindset, right? I know a guy whose brother died in a car accident, and he went down the dark path and did drugs, and was a gangster, if you want to call him that, for like 10 years. Wait, right? And he's like, I finally found God, and now I'm back. And so what our objective is to make life as easy as possible for these families, and then give them the resources and give them the time that they need to go through this tragedy so that they can continue with an optimistic look on life, um,
Gotcha.
right, and move forward. So
All right. So if someone wanted to contribute, how would they be able to contribute to your organization?
yeah. So right now, as far as like receiving money, we have a Venmo account that I can put on here.
Yes,
Uh,
yeah, put that link in there just in case, and I can also post it when I post the video. If anybody want to contribute,
yeah,
it's especially now during the holiday season, right?
yeah.
You may want to help some families out or whatever. It's all about helping,
And
all
and
about
maybe
giving.
too, Daryl, what could be a better idea, because we don't have a family. Maybe we'll identify a family for Christmas. I haven't even thought of that. Maybe we'll find a local family. That might be a
Yeah,
great idea, actually, to find a family and help somebody during the Christmas season. Um, yeah,
yeah,
that's actually a good idea. I was going to say maybe wait till we identify a family and then we can do something, because I don't take any, like, all of the money. that any of you would send would 100% of it go to the families. Like that's why I do real estate, is because I want my nonprofit to get big, and I don't ever want to take a dime of donor capital, donor money. I want the real estate to support me and to support the nonprofit. So
Right.
I wouldn't need the money unless I had identified a family to give it to. So
Sounds good. All right. Well, I want you to send over that link or post a link, or if you want, if you don't want to post it here, send it to me. If you want to send it to me, then when I do post the video, I'll make sure I say if anyone would like to donate to the organization, here's a link. And if you don't have, if you currently don't have it, if you send it to me later, I'll just update the video and let everybody know. All right. All right. But I thank you for that information. Excellent. Excellent. Thank you. So since the accident has happened, I know you have gone through a lot. Um, how have not looking at you now getting into real estate, wanting to help the community, in what way have you looked at your underwriting to say to make it where to say where um I you know I want to help the community. I want more. I want to try to give back. When you look at your underwrite, is there anything that you try to um how can I say the right word? Is there anything that you look at to say I could use this extra capital here to contribute to my 501c3?
hmm. I I have not, honestly, Darryl, with the apartments. With my fund, what I've done is that any of the money that we make, 5% of it will go to the nonprofit to support a family, but on like an individual asset basis. I have not considered that, but I think it's a really good idea. I know um, there's a couple organizations, right, like Whitney Sewell and um, oh, what's the other one I'm trying to think of, that they have like a nonprofit connected to each of their apartment deals. And, you know, is that
Yeah.
kind of what you're asking is?
Yeah, I used to follow Whitney Sewell. Um, I used to listen to him all the time when I first got into real estate, and I still admire him. I admire his work so much. I don't have time where I could just listen to every single podcast. So I hate to say I didn't want to like have to drop Whitney Sewell, but I had to start narrowing what I listen to, who I listen to, and how this podcast or that podcast can help me in my underwrite. Because I
Right.
started focusing so much on my underwrite, I wanted that podcast to tell me something different. Tell me something that I can improve on my underwrite.
Hmm.
You know,
Well,
so
I can speak to something similar to that though, Darryl. Even though I haven't, like when I looked at my underwriting, haven't used it to impact like my nonprofit or my 501c3.
right.
Um, there's a like a TED talk that I'll find and send to you as well. It's about impact investing,
Mm.
right? Which I think impact investing is very critical and important when you're dealing with tenants and you're, coming into a new market and community. Um, I'm of the mindset that, you're because like with my Montana deal, right? We had 31, so we have 54 units month to month, right?
Right.
31 of those 54 renewed at a $385 increase, right? Which is crazy, right? Right. But what we're doing, because like those are people's lives, and I believe that every life matters, and they may be tenants, but they're still humans like you and I. So what is the value that we're adding to them, right? Because they're not just going to stay there because it's like that's the market. What we're doing is, one thing that the tenants have really been wanting is like a pergola with a nice barbecue set with some cornholes, So we're adding, something, a community amenity space for them that they don't currently have. And I mean, it's Montana, right? So all these people are, they're outdoors people, right? And so to give them more outdoor space to be able to utilize and to add value to them, right? A lot of them were very excited, and we expected a lot of pushback on that rent increase because it's a big rent increase, right? Uh,
Right.
and so once we sent out that, hey, these are the improvements that we're doing, we're going to, well, we're fixing roofs, we're redoing the driveway, we are um, adding the pergola and the barbecue set, and we'll put some games together. And then we're doing a really nice upgrade of these interior units once they move out, and we're giving tenants that are still there the ability to move into a renovated unit for a lower increase, right? So even though that might seem small, I think that if you're going to do rental increases and you're going to charge other income, you know, I think that one, you've got to incentivize them, give them some amenity that they don't already have. Um, but also, a lot of tenants, right? They just want a clean, safe place to live. And I think that if you can build, some of these big apartment complexes, you see them throwing pool parties and, movie nights for their apartments. I think if you can make it feel like a community within the complex, the more you can do that, the more they'll make it like treat it like their home, the less turnover, the less deferred maintenance you'll
Right.
have, less repairs and maintenance because they care about it, right?
Right.
And to wrap that all in a nice, beautiful little bow, right, Darryl, all of that impacts your bottom line, which impacts how you underwrite, and all of that, comes
Right.
together.
Right. So you said a lot right there. You said a lot. But I want to jump back a little bit. I want to jump back to the 54.
Let's do it.
Now, now, why do I want to jump back to that 54? You said there were 54 units that was month to month.
Yep.
Here we go. You got your T12, you got your rent roll, you're doing your underwrite. Seeing, and I do believe the total number of units were how many?
Yeah, it's total of 54 for the full
And
complex.
all 54 were month to month.
Yep.
Now, some of y'all may already know what kind of question I'm going to ask. But when you saw 54 units that was on a month to month, what? And I don't want to put it like that. I want when you saw 54 units and the total number of units was 54, did you think of any kind of emergency contingency in your underwrite? Did you add any type of an emergency contingency to your underwrite in the event that more than 54 or all of 54 would have left?
No, no, I would say no because I think it goes back to our conversation last time. We knew our
Yeah,
market
right,
and we knew what the market was. And so even though we went in and did that $385 increase,
yeah,
right? Like there's not anything cheaper. And we were still below the market. So
gotcha.
when we walked into this, Darryl, thinking that we were going to have at least 50 to 60% vacancy, and we were planning on it, right? We were planning
Right,
on renovating 50 to 60% of the units. We were pleasantly surprised when it was 35% vacancy because based on that increase in income that we got from those renewals,
yeah,
we are only about $7,000 deficit from break even with 19 vacant units.
okay. So, okay, so that's okay, that's interesting. That's interesting. Right. So you said, hey, and, and I love that. I love that you said, hey, I knew my market because I'm gonna tell you, everyone, that's the most important. I think that's one of the most important things besides underwriting. Think you got to know your market. If you don't know your market, I'm gonna tell you, you're liable to jump into anything. You're liable to run up against so many problems and stuff like that. But the one thing he said, there's two things that he said. One thing was I knew my market. The second thing was we increased the rents. He said by 300 and some dollars, but he was still below market. Did y'all catch that?
You got that right. Yeah, we could have
Yeah,
pushed even higher and probably got it, but I mean, we got our
yeah,
increase that we wanted, right? And we're really happy with it. And the tenants still got a little bit of a better
right,
deal than if they would have had to have moved. And
right.
and
So
some did, right? But
yeah,
a lot
yeah.
less.
So see, so if they would have moved, they would have jumped into an apartment that was higher than what he was raising the rent. So what would be the purpose to move? Just stay there, right? Yeah, your rent went up, but if you moved, it was going to go up even more, right? And then
Yeah.
what a lot of people don't take into consideration is you got to put down a security deposit, so you got to bring money to the table for that.
Yep.
You also have to pay the cost of moving. Now, a lot of people say, well, I'm going to save money because I'm going to move my own self. Actually, you're not really saving money because you're not factoring in your time.
That's right.
All right. So when you and so factor in your time that you're now the moving man and what the moving man would have charged and so forth. So yeah, that's excellent. Um, did your lender during that process that your vacancy had increased? Did your lender say anything to you, or did it come at you sideways?
No, our lender had intimate knowledge of the past owner and the property.
Okay.
And so it was a local bank.
All right.
And so we got better terms than, any other, like we went to a couple brokers, Fannie, Freddie, and I really think that, especially right now in this day and age, that if you can
Yeah.
build relationships with the local bankers who know the owners, who know the properties, like you're going to get much better terms. And we were an outside group, right? He didn't know us from Adam, but the fact that he knew the builder and he knew the property, like, was way to our advantage. Um, and he was like, he knew that we were expecting 50-60% vacancy, and we're all pleasantly surprised and happy that we only have 35%.
Right.
So we can do 20 units now, and then come say March, we can possibly do another 20 units, moving tenants who renewed and put them
Right.
into the renovated, right?
Right.
uh, and I think one
Gotcha.
thing to note too is that 31 units, you might be asking, well, did you put all of those on a year lease? And the answer is no. We did some sporadic in March, and then June, and then September, and so we've got them broken out to like the end of each quarter.
That's perfect. That's perfect. And actually, I could scratch that question off, right? But, but actually, that's excellent because yeah, you spread it out. You don't want everybody uh checking out at the same time. So
And
that's perfect. Perfect.
especially in the winter time, as you know, right? The winter time is the worst time to
Yeah.
try and lease a unit. So if you can,
Yeah.
for Montana, the hot season is like March to like October. So we spread them out pretty much between those months.
Cool. Cool. So, what I would like to do, I have a sample. I don't know if we got into this last time, but I have a sample rent roll.
Okay.
Again, this is only a sample, right? And the reason why I'm showing this is just to um one to give an example of what a rent roll may look like, but to also let you see what some of the things that that you're going to see on the rent roll. Okay. Now the rent roll that you're going to see is an old rent roll. I already marked on it and everything. So you can see I was highlighting working on this rent roll. Okay. So here, so everyone that's I know everyone here because I see the names, but I think everyone here is familiar with a rent roll. But everyone looks at a rent roll in a different way, right? So as you probably see here, what I did was I highlighted all the vacant units. All right. So that way I could see what's coming up. Now, I mean, so I could see what's already current. And then so I'm not gonna get so now my next question to Joe is when you're looking at a rent roll,
Yeah.
right? Whether no matter what kind of rent roll, I don't care what kind of rent roll. When you're looking at a rent roll, what is it that you're looking to hear? And I said here. I know I didn't say see. I said here. What is it that you're looking to hear from that rent roll?
Yeah, I believe that a rent roll tells the story of the complex, right? Even more. I mean,
Right.
before a T12, I really like looking at the rent roll. And I think the first thing that I would want to hear is, how many units are month to month, right? That's the best way to implement your business plan is if you've got all the leases that end in a year from now, there's not a ton you can do to force value or force appreciation in the short term, right? So you got to find other means. Um, but that's an interesting question. I haven't heard of what do you want to hear? So probably month to
So
month. I and
so
I
the
would
re- so Joe, the reason why I worded that way
yeah
is because I believe, and you already said it. You already said it. I believe whether if it's the T12 or the rent roll, it tells me a story.
yeah
So when I say want to hear, I want to hear the story, and I'm looking, and it's telling me a story. It's telling me, "Hey, Darryl, listen here, man. Listen, I know y'all think I'm crazy, everyone. I'm not crazy, but it says to me, "Hey, Darryl, you see what I see?" And I'm like, "Well, what do you see?" I see a bunch of vacancies, man, and he said, then it says, "Hey, why don't you take that lease from and lease in? Why don't you categorize that, right? Put it.
yeah
Let's see what's going to happen here." So it's a story that it starts telling me, and my mind gets to asking questions to myself, and then I start trying to answer those questions. And what I'm trying to do is I'm trying to see what beholds the future for this particular rent roll, for this particular apartment complex. That's the reason why I worded it that way, because there's a story in every single thing that we do here.
yeah
Whether if you're looking at the OM, you may be reading it, but it's telling you a story. You're looking at the T12. Yeah, you're looking at it, but it's telling you a story.
yeah
You got the rent roll, but it's telling you a story. That's the reason why I worded that way. What what
yeah
what story does it tell you, or what do you hear?
yeah. One thing I'll add to that, and I'm going to put this in the chat. I hope it's all right, Darryl. Um,
Sure, go ahead.
the picture I just put in the chat is of my 54 unit in Montana.
Uh-huh.
And so when I get a rent roll, I will do this analysis pretty much right from the beginning.
All right. Is it okay if I share this?
Of course, of
All
course.
right, so let's share.
And I can
Thank you,
even
man.
pull
This
up,
is great.
I can even
Matter of
pull up
fact,
the rent
yeah,
roll in mine if you want,
yeah. Do you want? Okay, well, you go ahead and share then. You go ahead. That's perfect.
if you'll
There
allow
we.
me. Okay.
Yep.
All right. So this is my rent roll for Montana as it sits today, right?
Hmm.
Um, the way that I would look at this previously, this is our unit mix. So what I like to do is, right, studios, the minimum rent 670, the average is 703, and the max is 735. Without looking at the market, I would say, okay, I know that they're already achieving 735, so I know that I can at least move my rents from 670 to 735, right? So that's 65 bucks. Is that right?
All right.
65 bucks. right?
Approximately, yeah.
That I can increase at least from the minimum to the max, right? And the
Right.
two bed even more. So now you can see right here, right? 45 month to month by end of year, we had 9, but right now they're all, month to month. So, and then we had our property manager. So this is our property manager, give us, what the rents should be. So our averages for each of those unit mixes was, these averages here. So to market, this is what we could get if we did a small update versus a large update, right? And then this is the gross rents that we'd be able to achieve. Now, this can show you that I'm not just speaking, and this is the truth, right?
Right.
So we've got, you can see right here, we've got 31 units that have renewed. These two are coming online right now. We've renovated them already. So we do have a couple with notice to vacates a little bit later. So I guess not the entire 54 were vacant or month to month, but we have 17 vacant and 2 ready to go, right? So when I look at these rents, and you can see right here what their rents were previously, right?
Yeah. Yeah.
And so what I really like to do is when I'm doing this, you can look at any of my rent rolls. Look, I'll show you another one. Maybe I won't shoot myself in the foot here. This is an 80 unit that I'm under contract on right now in Idaho. Same thing, right? What's the unit mix? And what's the low? What's the average? What's the high? So at least I know that I can get, what is that? 70, 80 bucks there. And my this helps with the business plan and figuring out when do I do my renovations? When can I push these rents, right? So month to month by end of year to April, end of April or after April to end of September, right? So this is what I do first of all. And then, most of the time they'll have, okay, what's the other income on here as well? What I like to do is, so you can see that there's other income here, but when we go to the T12, when we go to the other income line item, there's zero. There's zero other income on their financials, right? But I know that in my rent roll, we've got at least 1,000 a month coming from pets and washer and dryers that they're not accounting for, right? And then yes, I love doing an audit on my lease end and just seeing, okay, usually I have this a lot more color coordinated. I'm a very visual person, so I color coordinate the crap out of everything. Color code, not coordinate, color code everything. But this can kind of show you real time, right? Like how many units are coming up and what we can do. You can see that I've got a couple tenants that live on the property because it's a college town. So and then the other one that if you wanted to take it a step further, what I could have done, square footage is a huge factor in understanding where you can push rents, right? Based on the rent per square foot, right? Because if you're, $1.50 a square foot, but your renovated units are going, renovated unit comps are going for $1.60 a square foot, it may not be worth doing a renovation because you're not going to get that ROI on your investment to compete with other renovated units. I'll let you take it from there, Darryl, unless there's anything you'd like me to expand on here. I think you're muted.
There. Yep. I'm muted. Actually, thank you. Actually, what I was going to ask you was about the renovation because at what point, you know, how much of a renovation would you like to see, right? Because some that's into this realm of commercial multifamily may not have a clear understanding of what type of increase they should see versus what they're getting. So Underwriting is very important for you to know. Without knowing the valuation or how to value property, you can never get no money. If you can't explain your underwriting, you can't explain how to get that capital. I have a coaching program and we talk about underwriting. I teach underwriting, the importance of underwriting, why you need to know underwriting, what's involved with underwriting. If you want to learn more about underwriting, join my coaching program. My information will be below. If
Yeah.
you see, let's say that the average rent is 700. This is just an example, everyone. So let's say that the average rent is 700, but you see that the rent could be increased $50. Would you say, okay, I'm going to do a complete renovation, or well, $50 is that even worth my time to invest on that particular apartment, right? So how would do you have, is there a minimum that you want to see
Yeah.
in rent increase so that you know, hey, this is good. I could get my investment back. Boom.
15% is our ROI metric.
There you are. Okay.
15 to 18%. In some markets, you may want to get a little bit higher because you've got to account for, vacancy and all of that fun stuff too.
Right.
But we want to see at least 15%. We won't renovate unless we get it. And I think right now might be the best time to increase that maybe even to 20%.
Right.
Because what I'm seeing across the markets is rents are softening still. And so it's not the best renovation market to be getting into. So like the deal in Idaho that I'm buying, we're not going to be renovating units until probably this time next year because we just can't get the rent increase. We'll do a $50 rent increase as their units turn because same thing, we're going to put in a pergola and barbecue and we're going to put stackable washer and dryers in every unit. So we're adding value to those tenants, right? For a $50
Mhm.
increase. We'll start doing our renovations as units absorb and there becomes more demand and rents start getting better, you know. Um, so 15 to probably 20% ROI. And I think that's where it's even more important to really understand your market and knowing, okay, what's that market vacancy rate? How quickly are units absorbing? And really you've got to factor in all of the economic vacancy factors too. You've got vacancy, you've got delinquency, you've got concessions, right? Concessions are a big one right now that a lot of apartments are utilizing to better market their units, right?
Right.
And then bad debt. Because if you go and increase that, like that was my biggest concern, because we had about 12 units in Montana that Montana does things differently than Idaho that we weren't familiar with, but like they had until end of November to either renew or give a notice to vacate. We didn't know
Right.
that if they didn't notify us that it just auto renewed on them, and there were 12 units that just auto renewed, right?
Right.
So my biggest concern was, okay, these people, because there's a lot of them that had been there 10 years, 12 years. And I'll even show you a video of a unit that had been there 12 years if you want me to share it.
Yeah, go ahead. Listen, go
Uh,
ahead, man.
but the biggest concern with that is like, okay, what's our delinquency going to be, when the month after they have to start paying, pretty much that $385 increase, right? And
Right.
again, we're pleasantly surprised, right? It's been, already in December and we have less than like $2,000-3,000 in delinquency, which is and it's all getting paid for too. It's communication between the tenant and property manager is very, very important, right?
I agree. I agree with you. And I think Alicia will agree with you because Alicia was communicating. I was I was communicating with a tenant. It was like what they weren't communicating back. I spoke to Alicia. Alicia took over. Alicia started communicating with the tenant. Alicia was experiencing the same thing I was experiencing. The tenant wasn't communicating, and maybe they just not used to. Maybe some tenants aren't used to a property manager or someone wanting to help them, so they don't. They may be afraid. You know how a bill collector call. You look at your phone and say, "Oh, that's that's Dayton." Uh, Click. Don't answer that. This is when you should answer and just tell them, listen, I'm having a problem right now, so forth and so forth. And then let them work with you. That's it. No
Yep.
need to. What more could be done? Except we evict you, right? Right. But I agree. Go ahead and move forward. I'm up here talking. Go ahead, take over.
Oh, you're good. And Alicia, I take it you've been in property management, or you'd probably agree with me that you got to train your tenants, right? and that
Yes,
and
you
that
do.
comes from fierce conversations and quick communication.
Yes, yes, it does. It comes from a place of help us help you, but please understand we're running a business.
Yeah, yeah,
That's
that's
right.
exactly right. And I think that if you have the mindset, like there's a lot of like slumlords who just don't care. They just want to make money. Like there's like if you're one of those good property managers who actually like they can sympathize with the tenants, but they also understand that it's a business, like it's a lot easier to work with those tenants and make things happen, you know.
Yeah, I totally
So,
agree. Totally agree.
but do you want me to show you a unit?
Yeah, show us a unit.
Okay. I've pulled up the unit that a tenant had lived in for 12 years, and I've got a video of what a renovated unit looks like that we did. So yeah, this is a one that had been here 12 years. Can you all see that?
Yeah, I could see it. Can everybody see that? Alicia, you see that?
Yes,
Wow. Now that's carpet.
Yep.
Are you going to pull that carpet up and put hard or flooring down, or you just going to let it stay carpet? Different carpet though.
Yeah, so where it's Montana and it's colder more months of the year than not, most people are putting LVP everywhere. We actually decided to do LVP only in the kitchen, bathroom, and entryway and leave carpet everywhere else.
Got you.
One, it's cheaper for us to install. There's not a lot of insulation between units, and so it'll help with the sound barrier as well. And carpet is just it keeps a unit warmer. So there's a lot of factors that we took into account, right? All right, so that's what an unrenovated unit looks like. And then what you'll see in this video, though, is that it was kind of our trial run unit, and it has quite a bit more LVP than carpet. Oh, come on, where is the unit F? Let's see. It's really cool. Our property manager put this together for us. So you'll see on this one, we did all LVP. We chose afterwards to, just have it in the kitchen. But
Right.
these are our cabinets that we installed.
Beautiful cabinets.
So melamine cabinets, new quartz countertops. They were actually um, um, it to put in laminate was only going to be a couple $100 cheaper to do laminate for this market. And we didn't, our property manager had kind of advised not to do granite or to do quartz, but we decided to do it anyway because it helps the sellability of the property.
Right.
And
Right.
to do laminate, it would have only been a couple $100 cheaper, and so we just opted to do it. right?
Wow, it does make that apartment like really pop out, man.
Yeah. So this unit cost us about $15,000. So if you were to take, we're gonna increase rent $550 on this times 12. Can you all see my calendar or my calculator?
Yes.
So I did 550 times 12, 6,600 a year divided by 15,000, and we got a 44% return on this renovation. Not too
Wow,
shabby,
not too shabby.
right? So this is what our heavy upgrade looks like, right? On a 2 bedroom, right? Or no, 1 bed, 1470, or no, 1350. Sorry, there we go. 1 bed, large upgrade, and then I'll show you. No, that's the same one. On our small upgrade, we kept the cabinets because they're the newer ones. So these are actually newer cabinets. What we did is we put door pulls on them. We kept the existing appliances because they were in good shape, but we did flooring. We did a full paint job. We updated lighting. We painted the trim and replaced the doors, new handles, right? New fixtures throughout, carpet and flooring.
Hey Joe, it's Peter. How are you
Hey,
doing?
Peter, going great. How are you?
Good. Hey, what kind of heat is that? Electric baseboard heat?
It's a boiler.
Okay.
There's one. So these properties are like eightplexes, right? So if you were to go in this door right here, you've got 2 units up, 2 units down. So there's essentially two fourplexes connected to each other. So if you're to go downstairs, there's one boiler system for 4 units. So
Oh,
Nice. That's great that it's
excellent.
gas instead of
Yeah.
electric because that was killers back in the day in the 70s.
yeah.
Now, did you also do the exterior, or was this original?
This the owner did it about a year ago
Okay,
himself.
that
So
looks good.
it looks great. We're very happy with it, you know.
Right.
So yeah, down there in that door is where the boiler is.
Cool.
Yeah.
Cool. So,
So,
now, we have an idea of your percentage that you look for your return on investment, what you look for in a rent roll. Let's let's now touch base on one other document, right? Let's touch base on one other document. Now, I know you don't. I remember you saying you do look at this particular document, but you focus a little heavily on the rent roll. So, what
yeah.
I'm going to share with everyone is the T12. Now, this is a sample T12, everyone. When you look at it, it's going to say December 2023. It's old. This is only a sample. But again, let me just share this. Hold on, give me 1 second, everyone. Now, Joe, by me sharing this doesn't mean that this is just showing everyone what it looks like. But you could discuss what you want. Don't worry about this rent roll, this T12. I just want to show everybody what a T12 look like.
Of course. Yeah. And when I say that I don't look at it, like usually the sellers that I work with
Yeah,
normally are how do you say them? Good old boys, do it yourself landlords. Their T12s typically suck. Um, and so usually the rent roll is a little bit more accurate. But I still will dive heavily into the T12 because it just like we talked about, it adds to the story and gives you more
right.
context and more detail to the story that you created from looking at the rent roll.
Gotcha, gotcha. So now when you're looking at your T12, what story do you want it to tell you?
I
What are you
want to
looking
look at
for in that story?
I want to look at the trends and see
Gotcha.
how things have moved up or down the last 12 months.
Right.
What we'll do too is there's a standard, like a standard deviation calculation that you can do. I've
Mhm.
got a document. One of my mentors created it that we can input a T12 into his document, and it has like a standard deviation above or below a certain number. And
Right.
what it'll do was if like let me just look at this document and see if there's anything that's glaring. So if like on this document, if we look at vacancy and we look at K14 and L14, those two numbers might light up like you know, they probably they would be in bright red. The question that I would have is, okay, we're pretty consistent, January through May, average of 42K. Why did it go to 46, 47, and then drop drastically to 35? Right?
Gotcha.
Why did that happen? And then why did it jump back up to 46? Right? Like that's a question that I'd have for the seller, the broker, whoever it may be. Right?
So that's yep. Mm-hmm.
And then I think the next thing too, even the first line item, gross potential rents, um, it'd be interesting to know like, hey, why did the gross drop in July? Is it because rents are softening and property managers had to decrease rents a little bit? Right. It looks
Mm-hmm.
like the first couple months they burned off loss to lease, but it didn't help that it doesn't look like that it really helped their growth that much.
Right.
So
Right.
then it's
And I'm glad you pointed that out because looking here, the one thing that I like to do, if down here, everyone, I like to do this on my T12s, to see the trending percentages, right? And the reason being is because of course, it's going to correlate with the numbers up here. The one thing that really also caught my attention on here, I wanted to know why was about the concessions, because if you notice, they're giving out a lot of concessions. Would you agree on that or disagree on that? What's your thoughts, Joe?
yeah, I think it's very important to see like with these concessions that it looks like they're struggling a little bit to
Mm-hmm. Yeah.
get it rented. Their vacancy is high. Yeah, I mean, if you're at 10% vacancy and your numbers are like an average of probably 8%, but that also is
Right.
because in July their gross potential rent dropped. If it would have stayed at 450, you'd be 10, 12%.
Yeah.
Right.
Totally agree. Yeah.
But yeah, concessions, yeah, it all tells a story. Concessions and referral credits, it tells me property managers are getting a little desperate. They're going to the tenants and saying, "Hey, um, invite your friends because we need to get these units,
Yeah.
booked up."
Exactly. I agree.
So I think even without looking at the rent roll, if you took the gross and say it's an average of 1,000, you know, how many units? How many units is this?
Yeah.
Hey Joe, I got
Thanks.
another question for you, if you got a
Okay.
second.
Wait. Hold on, because we don't do that. Hold on one second. Hold on one second. We'll get back to it because I gotta let Alicia get in there. So hold on 1 minute, Peter. Then and maybe Joe can hang around for an extra minute or two.
Yeah.
Um, so Alicia, go
Yes.
ahead. I know you have some questions. Come and go ahead and ask Joe your questions.
Well, I'm actually good because you asked every single question that I actually had. I would like to say, and I know that some of the viewers came in a little after Joe talked about this, but I appreciate how you think about the tenants and also their comfort and your willingness to put in things that make living fun, those different activities. So I will say that I do appreciate it. And thank you so much.
Yeah, of course.
So, all right. So, Peter, what question did you have?
Thanks, Darryl. Joe, I know you're up in Montana. I just don't know exactly where, but I'm assuming these are all tertiary markets. I guess my question is it workforce housing for like ski areas or oil? And two, do any of those companies help subsidize any of the rents? Or have you thought about that?
Great question. So this is in Missoula, Montana. I wouldn't call it a tertiary. I'd call it maybe a little bit more of a secondary. But Bozeman is the big market next door to it. And this one, I would say yes, they're more or less blue collar workers there. We actually have quite a few students. There's a big college there in Missoula, but there's not a lot of oil. There's not a lot of that kind of stuff in Missoula. So a lot of our tenant base, there's a big development with the airport, so there's a lot of contractors. Um, but we have not talked to like specific employers yet to know if like if there's any subsidies from the employers to help the tenants. What we're doing, and we wanted to, like, for me, like, this is the part of asset management that I really enjoy, is now that we kind of know who our tenants are, I'm going to send out like a tenant survey because I want to know, right, where they work, how many pets, how many kids. I want to really understand my demographic of who is living in my property now that we have people who have renewed, right? And then we can go to those companies and start, having conversations. If there's one company that has a bunch of tenants in there, and they're good tenants, then of course we'll go and start, marketing, to that company. But it's a great question, Peter, and I think that it's worth, diving into further as you become more stabilized.
Yeah, just because I'm out in Colorado and that's come up a lot. I'm in Denver Metro and we were looking at a property just outside of Steamboat.
Okay.
And, you're going to get a lot of workforce housing from the ski areas, but then we've heard nightmares of, the oil guys coming in there and just trashing the apartments and stuff and just leaving them. And that kind of falls back on the employer because the employer rents out, half the units in a complex or something. And Darryl, I just want to say, did you import that hat from Texas?
So, so
Oh
let
yeah.
me say, um, I don't know if you recall, Peter. I was living in Texas for 8 months at the property that we had there, that we have there,
That's what I
and
was wondering.
yep, and I bought me a beautiful hat, and I put it on just now because I wanted to. We're on the hour of 12, where we're coming to an end. But I wanted to say to Joe, one, I appreciate you coming back. That's number one. Thank you so much for explaining, and I hope that whether if you're new or seasoned, that you learn something from today. Okay, that you learn something. But I also want to say, Joe, I'm planning on I'm gonna come to Montana, and I'm coming with my cowboy hat.
Yeah, you better
You know
do
what I'm
it.
saying? My second nature resident. I hope I said that correctly. I'm a second nature resident in Texas, and I'm coming there. We're gonna eat us some steak and some brisket. All right. And I'm hoping Alicia and her husband will join me and my wife in Montana. And if anyone else want to come, let's go there and get us. Uh-oh, Peter said he coming. Joe, thank you so much. And listen, I'm gonna get with you. We're gonna come to Montana and we're
Yeah,
gonna have us some fun. And since
yeah,
I know you're there, maybe we could even team up and partner on a deal or a property in Montana. I would love to work with you.
yeah. I'd love to too. We have a really good relationship now with the guy who sold the property to us, and luckily for us, he's got a handful more in Missoula that are, I mean, they're just going to be a copy and paste of this 54 unit, right? They all have
Wow.
really low rents, and he built them
Right.
himself in the late 90s, and we plan on buying quite a few more in Missoula. So Happy to
Okay.
have you guys
Well,
come and tour
so
some.
wait a minute. So how can we help with that? How can we get on that deal? Well, I'll talk with you afterwards about that.
Sounds good.
I'll talk with you afterwards about that
I just thought Darryl was going to go up for an audition on Yellowstone with that hat for next season.
That's right.
there it is. There it
And
is.
they
I'm- I'm-
actually do a bunch of recording or in Missoula for Yellowstone.
really?
Yeah. So before we bought the property, their whole crew was in town like 2 weeks before we bought it, videoing
Wow.
on their main street.
Nice. Thanks a lot, Joe, for sharing. Really
Yeah.
appreciate your story.
So,
And
Joe, if anyone,
quick, do you want me
if,
to
if,
answer a couple of these questions that are in the chat?
no, yeah, let me see. What? Yeah, go ahead. Yeah, yeah, if you want to, because yeah.
You sent me an invite for 10:30, so I'm good till then. I appreciate everybody's thoughts about the nonprofit and my brother. That's really kind of you.
Yeah.
So Kenneth asked, Joe, did you syndicate the Montana deal? If so, what did the investors say about entering the deal with high vacancies and negative cash flow? And the bank, what did they require, if anything, to ensure there was sufficient cash flow to meet the expenses? Yeah, great question. We did syndicate it. We structured it differently than I've ever done a deal. These are the times to get creative. And like I said, I think probably the first time you don't find deals, you create deals. What we did is we raised a full pref equity. Most people do common equity. We did full pref. We had 2.7 million to raise. My partner and I brought in 650,000 ourselves, and we were the common equity shares. So, and then we raised 2.05 million as pref equity. And if any of you is everybody familiar with what pref equity is and how it's structured? Darryl, would you like me to explain it quickly?
Sure, go ahead. Sure.
So
We may have somebody that's shy.
pref equity is essentially you give what's called a current pay and an accrued pay. It's usually short term and it's kind of like hard money rates. So what we did is we have a 10% current pay. So you're going to receive 10% on your money, 10% annually, but we're distributing monthly and it's a two-year hold. And then we had class A to like class E shares based on the amount of money that you invested. So we had one guy who deployed 800,000 as pref equity from one of my past deals, and we gave him a 17% annual return. So a 10% current plus a 7% accrued rate each year, right? So when we go and refinance at the end of year two or refi or sell at the end of year two, he's going to make 14%, right? So we were as low as 14% up to 17%. And then what we also did was most pref equity does not offer depreciation benefits, but we offer depreciation in a couple of the classes of shares. So you may get, so we had one guy who brought 400,000. We gave him, he wanted depreciation, so we gave him a lower pref equity to give him depreciation, right? Because we had a handful that came in with their self-directed IRA funds that, they wanted the higher rate, but no depreciation. So we were able to distribute significantly more depreciation to investors because, they couldn't take that. So that's how we structured that deal. And we raised 200,000 for investor returns. So 200K there, and then 200K in debt service. So we raised quite a bit of extra money with about 100,000 in working capital. So 500,000 in total for essentially reserves for investor payments or investor distributions, debt service payments, and just working capital. So
That's great, man. That's very creative. That's fantastic.
yeah.
So if anyone would like to reach out to you, how can they get in contact with you?
Yeah, I'll put my contact information. Let's see. Put my email, and then I'll do it for this group. Maybe don't put it out to everybody, Darryl, but I put my phone number in the chat.
Okay, I won't put that on the video.
Yeah, but if you've got it now, happy to jump on a call and chat with any of you if you want to learn more about that structure. Again, it's very different than what most people do. And even on this 80 unit that I'm buying right now in Idaho, it's very different than your just standard 7-pref 70-30 split. We're just, getting creative to make deals happen,
Sounds
right?
good to me.
And I've always been kind of a trailblazer and doing things outside of the norm.
Yeah,
I think as long as you're meeting the needs of your investors, who cares?
there it is. So,
So,
Joe, I want to thank you again. It's 12:07. I will be in contact with you. And also, when would you say is the best season to visit in Montana?
um, I would say, it depends on like if you guys wanted to come while we're in the middle of renovations, January, February. But as far as like the best season, I'd say probably March, April.
Okay,
As spring really, maybe April, as spring really starts to hit, it's so beautiful up there. But if you're skiers, anytime from now till probably end of March, you could probably go skiing up there. So,
sounds good.
yeah,
Well, I'm gonna be in touch with you because I want to come to Montana. Believe it or not, I had always wanted to invest in Montana. It's just that I don't have anyone in Montana that I can really rely on. And like you said, the one thing I harp on in my coaching program is you have to know your market better than anyone else. And since I don't know the market of Montana, I wasn't going to go there. So
yeah,
I would like to really build a nice, strong relationship with you, and maybe we could partner up on some opportunities in Montana.
yeah.
All right.
Yes, sir. One last thing I'll put is
Sure.
I put my Instagram and I'll put my LinkedIn um, in the chat too if you want to follow me there. My
Okay.
partner does a lot better job at this than I do. He likes to put out a lot of content about the market. My partner Levi Allen he'd be another one, a good one to have on the show. I think he's actually better at underwriting than I am. Um, so
All right. Well, I do. You and I are connected on LinkedIn. I do believe. If not, we should be.
yeah.
Holy smoke! How is that we're not connected on LinkedIn? Oh
Well, we are
man. Well, yep, we are now. So, but thank you again. Thank you, Joe. Now listen, everyone. In 2 weeks, you know what day that is? That's Christmas Eve. So I was contemplating on whether or not if I was going to hold the underwriting show on Christmas Eve. Because if I don't do it, then we won't have our next meeting until January, and that is a long ways off. It won't be until January 7th. And so I'm really contemplating. I don't know. What I think I'm going to do is I'm going to have the meeting, but I may not have a guest. And it may just be us coming together, just talking like a Q&A type thing between us. Because I don't want to go that long without a meeting. So on the 24th, I'm going to make the decision right now. On the 24th, there will be no guests. It will be an open session where you and I could talk. If you want me to show you something, I will show you. If you want me to pull out the underwriting tool and just show you some on the underwriting tool, or just walk through an underwriting, I will do that. Okay. Because I don't want to wait till January 7th. Okay. So we're going to have a meeting on the 24th. Maybe I even will cut it for just 30 minutes. But if it's going good, then I'll let it go for an hour. Okay. But I want to thank you all for coming. Joe, you dropped so many platinum bombs on us that you made me put on my cowboy hat, my Texas cowboy hat.
There you go.
But listen, thank you again, Joe. Thank you for coming out. I appreciate you. And I will be in touch with you. Okay. I will be in touch with you. Thank you all for coming out. I'll see you on the 24th. Joe, if you want to come back on the 24th just to hop in with us, you can. You're more than welcome. And anyone that's watching this, listen, if you enjoy what you have seen for the year of 2024, subscribe to the channel. Okay, subscribe to the channel. Help us, um, um, get our numbers up to where more content can reach more people. Because right now they're limiting me.
Oh, sorry.
Oh, because right now they're limiting me to what I can, how far I reach. I have. Okay. So, but if you tell your friends, tell your family members and stuff, yo, check out this guy, subscribe to his page. It will help me out a great deal. So, see you all later. Thank you, Joe, for coming. I will be in contact with you. And anyone else that want to come with us to Montana, I think it's going to be in April of 2025. Come on. We're going out there to do some beef ribs, some brisket, some steaks. We're going to have a good time. Thank you
Yeah.
all. Thank you for coming. Thank you, Joe.
Thank you.
And I see everybody on the 24th. Thank you. Have blessed weeks.
You as well. Thank you.